Greetings, members one and all of the Salivation Nation. Silver is slipping back a bit, but you know what? It's holding its own when it's all said and done against gold, and the ratio is actually tightening a little bit today. What is the future for silver? And are we starting to kind of see it hold on to its own and maybe continue a pace upwards in the coming months? Along with gold at a closer ratio, we'll explore that with a few articles here. The first one is from FX Empire. Silver, the soft September after a super summer. Silver is retraced in September after coming close to the key 20 level. The metal is mimicking gold and acting as a safe haven asset, so traders should treat fundamental releases as market movers. I think that's a good sign, that silver's starting to be seen as a safe haven asset, even if we're really only seeing most of that manifestation within the paper markets, the exchange traded funds. So silver's acting as a safe haven asset. It was a very sweet summer for silver, which rocketed 19.6% higher. It got very close. It was in the 19s for a little while. What goes up must eventually come down, however, and this rule certainly rings true when it comes to currency movement and profit taking. The XAG US dollar has declined by 2.7% in September. This retracement or retracement should not be all that surprising, keeping in mind that it has been relatively minor in comparison to the huge gains that we saw in July and August. In the Tuesday session, silver is trading a shade under the 18 level at $17.93 for the bid price. We'll take a look at the prices here in a moment. In real time, as of the recording of this video. Of interest to investors and traders is the fact that silver is acting as a safe haven asset, much like gold, which has also jumped higher in the several months. Both commodities have benefited from escalating trade tensions between the U.S. and China, as well as a dovish stance of major central banks worldwide, especially the Federal Reserve. If investors continue to treat silver as a safety net, then key fundamentals such as inflation, GDP, and job numbers would have a significant impact in the direction of the XAG USD. As well as interest rate policy could move the metal. So if investors feel that more rate cuts are in the way, silver prices could move higher. And that's the key test, I think, right now, is being able to view silver as that safe haven asset like gold. Obviously, that does not take away its industrial applications, biomedical, and technology. We don't discount any of that. However, this is something that we should really keep in focus and understand that silver is starting to make a comeback in terms of being seen just as much, if not more so, that safe haven asset. I hope that's the case. The pair started the week on a sour note, dropping 1.2% on Monday. It was just last week that silver punched above 1950, and there was growing talk of a rally past the symbolic 20 level. However, traders should keep in mind that the 20 level has proven a tough nut to break. It was last tested in September 2016, and a temporary overenthusiasm for silver. The author expects the metal to hover between 18 and 1860 during the week. Of course, a major geopolitical event or unexpected key U.S. economic report could change things, but absent any of these shocks, the author would be surprised to see a sharp volatility from the metal. And that's just it. I don't think it's quite tested enough. Because you saw the drops too. Silver dropped much quicker than gold, and the volatility is somewhat normal for silver, but usually it's not quite that much, especially when you see the ratio. Next one here is from FX Street. Gold and silver ratio falling as silver outpaces gold. So this is kind of exciting, especially today. We'll look at those numbers. The price of gold sits between a range of $1,486.62 and $1,501.02. But bears in control. The gold and silver ratio recently made a 50% Fibonacci retracement of the summer 2016 lows to 2019 highs. The price of gold has continued to decline from the risk-off fueled rallies which came on the back of the heightened trade risk and various geopolitical disturbances which have shaken markets to the core during the summer period. Today, the price of gold sits between that range, 1486 to 1501, down 0.42% on the day so far. Silver, which had been making a sound comeback, playing catch-up with its sister metal gold, is managing to attract a bid, currently 0.78% on the day so far, and has traveled from a low of 1778 to a high of 1817. The gold to silver ratio is subsequently down negative 1.06 and has fallen from a high of 83.64 to a low of 82.31. The ratio recent made a 50% Fibonacci retracement of the summer 2016 lows to 2019 highs, with the bias in favor of further downside and a break below the 200-week moving average located at close proximity. So it's gold en route to 1480. With risk appetite surging, gold looks to consolidate just below $1,500 an ounce, with key central bank decisions on the horizon this week and next, analysts at TD Securities said. Given the skewed positioning and the recent breakout at the $1,500 an ounce level, we would not be surprised to see the yellow metal trend towards 1480 or slightly lower from here. But the recent moves in risk markets have seen traders pare back their expectations of Fed rate cuts, which suggests that any additional downside from here should be temporary and represent a buying opportunity given the underlying economic weakness and dovish central bank tilt still remains. I think that these are higher floors for us, and those higher floors may be a way to be able to take advantage of those lower prices for now, knowing or perceiving that they could go higher. Of course, we could all be wrong, and they can continue, and these floors could go back to normal levels. You know, no one really knows, but I'm tend to lean in the favor of what this article is saying that, you know, our floors are getting higher, and these pullbacks are only temporary. In other words, I don't think there's going to be a dead cat bounce here. That's just my opinion. The price is heavy while below the 21-day moving average and 23.6% FIBO retracement of the July lows to recent swing highs, as well as the 1500 handle. Bears can approach 1478 as the 13th July volatility spike below low, which guards the 19 July swing highs at 1452.93. Bulls will need to get back below 1550, which would guard prospects for 1590 as a 127.2% FIBO target area. That's technical analysis. And then the silver is the same. It says the bears are taking on the 28 one-day moving average, but still bullish. Pen bar is keeping bullish prospects alive. However, failure to advantage beyond 1880 will likely leave the door open for bears to jump in and force out a downside play to the 1750s, being the 50% FIBO of 2016 highs and recent swing lows. So, you know, it's going to be interesting. Let's take a look here at the gold and silver prices and the percentage, because I think this is important to see a trend of silver moving back into its reputation as being a hedge, a metal to protect us, wealth preserver metal again. I think we're back there again, and will it kind of make its move forward along with gold? We shall see. But as we can see, gold dropped 0.89% today. The stock market's been relatively calm. There's a little bit of loss in the markets, but not too bad. And so down $13.30 for gold today, but 0.89%, a bigger move than silver. Silver's only down a cent, 0.03% loss. So silver's becoming the stable metal for today's trading. And the biggest loss we took was from platinum at a negative 1.69% loss, down $16. Palladium is up $14. Look at that, well over. It's going to almost beat gold by $100 if the rate things are going now. And that doesn't bid well for those who are interested in that reverse proof palladium eagle coming out from the U.S. Mint in a day or two here. $926 low, $948 high for platinum. Palladium, now it stands at $1563. Rhodium is up $100, $43.50. It got over $5,000 for a while, but it's hanging on there. So where does this leave us? with the gold and silver ratio? Well, we'll find out here. This is the gold and silver ratio now. It is tightened up by 0.64 points, 0.78%. So just over 3/4, under 1% there. And I think that's it's not that big of a move, but I think that tells us that there's some support for silver there, and perhaps maybe the electronic markets are seeing an opportunity here to be able to dig in and bring silver back up, rise it from the ashes, kind of as where it has been languishing for quite some time. 31-day average for the gold to silver ratio we saw really tightened up here the beginning of the month, earlier this month at 79.32. It's kind of moving back up, but it could swing back down again. I think it will. I think we're going to see this tighten up in due course. What that tightened up number will be, who knows? But there you have it. Post your thoughts below. Silver, will it retain its role as that hedge, as that wealth preserver metal? Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe.